All right, good morning, everybody. Happy Monday. Serge Berger here from the Study Trader. We're going to get started in about 2 minutes or so here, just a little bit after the top of the hour. Hope you guys had a good weekend. So let's get after it. We had a big day on a Friday, and we need to make sure that we are properly set up here for this week. If you guys can hear me, just if you don't mind, quickly give me a yes or something in the chat box. That would be awesome. And then we'll get going here in just a minute or two. Thanks for being here. Excellent, excellent. Thanks for being here, everybody. Alrighty. All right, we'll get started in just a few seconds. There you go. All right, perfect. Good morning, everybody. Serge Berger here from the Steady Trader. This is our Set the Market morning show. We do this Monday through Thursdays. We go through the top things on our mind, some of the most important things that we think are taking place in the markets. And we typically try to do this in about the 10 to 15 minutes here, very quickly and right to the point. Here's my notebook. I would encourage everyone to also have a notebook. I have a notebook that I note stuff. It's usually about 3-4 pages deep by the time the day is over. Let's get started here. So what are we going to go through this morning? First of all, we do need to quickly look at the S&P 500, see what happened on Friday, what that means. Then we're going to look at the VIX. There's a very important level in the VIX that we need to watch that has proven the test of time over the years. Then we're going to look at a single name stock, Carvana and Palantir. I'm going to actually write that one down. Didn't write down this one. And then we'll look at gold. I'll show you what I think is the most important chart in gold. So we'll look at that here in just a couple of minutes. Let's get started. All right. First of all, maybe just before anything, let's just look at the DAX. If you have looked at the news this morning or over the weekend, yesterday, the CDU over in Germany won the election. They're now going to try to create a government in a shorter period of time than usual. The German DAX this morning up about 86 basis points, basically roughly where it was Thursday morning. So it's still going. It's going still on track very much to the upside. So German stocks still beating the living daylights out of the S&P 500. And Chinese stocks are holding up as well. So we're starting to see what we think is something we've talked about now for quite some time, many quarters now, that we're likely going to start to see a rotation, a broadening into other parts of the world and other markets. And that's why I think so many retail investors are going to blow up their accounts. They're going to blow up their retirements in the US, potentially over the next few years, because the concentration level is completely crazy. I just got off a phone call. I'm going to do a very, very, very big podcast next week, I think. And it's with a gentleman that has an unbelievable amount of insight on the street. And I was, as I do with everyone, I voiced my concerns, what I see, how the retail investor is positioned and how alarming that is. And that's what I'm trying to tell people every day. Most people don't care until their portfolio is down 30%. But this is not the time to be lackadaisical about these things. It's about time to be proactive. So let's look at the S&P 500 and then start kind of working our way into some of the more weeds a bit more. Now, what we've been saying now for weeks and weeks and weeks, and I'm hoping this is now finally resonating with people, is that the S&P 500 remains in a trading range. We've mentioned this trading range now for multiple months. It's been a trading range since the election. This is your trading range for the most part right there. The lows of, what were those lows? The lows of the 20th of December remain important. We haven't broken those lows on a daily closing basis. It's about 580 in the SPY. Until that breaks, we remain on a trading range on the downside, and until we really sustainably break on a weekly closing basis, well above 610 on the SPY ETF, it is what it is. We're going sideways. Now, of course, we have NVIDIA earnings this week. I don't know what to tell you. As far as I'm concerned, that stock can go up 10% or more. It can go down 10% or more. I don't know. What I do know is that there's a huge amount of correlation risk to this stock, from this stock to the broader market. I don't know where the stock goes. I really have no idea. I own it somewhere, probably in a long-term portfolio where I have a diversified asset allocation theory. I don't own the stock on its own. I think there will be a point to buy it. I'm not sure this is it right now. But again, it's such a high concentration in the stock that people have that I think anything can happen. The stock can pop 10, 20%. It can drop 10, 20%. We'll have to see. We'll look at that a bit more tomorrow. So that's just quickly on NVIDIA, because I'm sure people are looking at that as well. All right, so that's where we're on the broader market. Now, if you're wondering if anything has changed because of last Friday, not a lot has changed. In fact, if we look at our trend work using the Market Rover, so for all of you guys that have the Market Rover, not a whole lot has changed. If you look at our sector list, most sectors in the S&P 500 remain bullish trend. If you look at this trend column, that's how we measure trends. We do the same thing for all the different industry groups and many other parts of the market, and they remain bullish except for healthcare and materials, which are healthcare is bearish and materials are neutral. And I actually think material stocks are going to be huge winners over the course of the next number of years. So that's probably going to be subject to change. So nothing's changed yet in a major way. The trends haven't changed, but we are starting to see the potential for lower highs. So for example, the BLOK ETF, Blockchain Leaders ETF, which blockchain stocks, right? It may be we won't know until it makes a lower low, but it may be putting in a lower high. And we're seeing that across different parts of sectors and industry groups that there's a potential for lower highs to be formed. It's not confirmed, but it's something we want to pay attention to, because last Friday was pretty gnarly. It may have been a one-off day. We know there was some CTA selling on Friday, like commodity trading advisors, but again, it's too early to say. But the trends are not yet broken, but it's certainly a very, very interesting point here to pay very close attention to that. One thing that I can tell you that has historically proven over the course of time, and this gets us to the VIX, is VIX somewhere between 19 and 20. So I'm going to quickly share this chart with you, and if you want to monitor this closely, I certainly would encourage you to do so. Let me turn this into a line chart, and I'm going to make it weekly increments. So when you look over the back of the course of time, and you have to go back over time, then the VIX has a very important level somewhere between 19 and 20. Let's call that 1950, just to kind of be sort of a little bit more specific. I think that's a bit too high. So 1950 is about here, right? So if you were to go and look at this a bit closer, maybe if you guys have a few minutes later on this week, go through and see how that level is important. Okay, it's roughly about the average line, but typically when the VIX stays sustainably below 1950, stocks get bought. A lot of the algorithms work this way. And so far, we remain below 1950 on, like a multi-week basis. So for me to see a broader risk-off move, not only we need to start to see some of these trends change in our trend following work, which we track very closely every day. If you have the Market Rover, you can do that as well. And I would really encourage you to get the Market Rover, because you can put your entire portfolio in there so you know when it's going to hell in a handbasket, which at some point it likely will experience some bumps, and when there's new buying opportunities. But the VIX remains below 19, let's call it below 20, right, on a multi-week closing basis. Once it gets it back above there, it's more a when rather than if, then I think we'll have a bigger problem. But it hasn't done that yet. In fact, the VIX last week, if you look at it, closed around, let's call it not quite 18. So we'll look at this back on the candlestick chart. So we're certainly not above 20. We're certainly not even above 19. But that's something that we are watching very, very closely. All right. Any questions on this stuff? Please let me know, and I'll be happy to go into a bit more detail on this. And which gets us now to gold and gold miners. First of all, I do want to make sure that everyone understands that gold miners are not gold. There's not the same thing. The GLD ETF or gold itself, which today is up another 60 basis points so far, gold futures, it holds in very well, even on Friday. But gold miners, which are stocks, right? Don't let gold miners be confused with the price of gold. Yes, there's a positive correlation. Oh, I'm looking at the wrong camera. Yes, there's a positive correlation, but it's not the same thing. So on a day like Friday, and we actually added gold miners last week, by the way. So Friday was not a good day for us on that trade, but it's more of a multi-month sort of view on that for now. But on a day like Friday, when everything was risk off, one would experience and one would expect to experience gold mining stocks to be down. In fact, gold miners were down 3.4% on Friday because they're stocks, right? It's not gold, it's stocks. You have to keep in mind that the algorithms rule the day. So if you are long gold miners because you're bullish gold, you may want to revisit that line of thought. Gold miners would be more of a trading vehicle. Gold is the asset allocation that we want to be in. And this gets me to probably one of the most, if not the most important charts I've ever seen on gold. Here it is. So let me explain to you what this is. So first of all, this is a monthly chart. So each one of these bars is 1 month. If you look at the bottom, let me move my picture a little bit here if I can. I'm going to try to do it. Ooh, I have two camera angles here at the same time. There you go. If you look at the bottom of the chart, you can see the timeline. So this is a monthly bar chart. And what you're seeing, what this chart is, and this is important, this is a monthly chart of the ratio of the price of gold versus the dollar. All right? Let me repeat. Let me say what this is and what it's not. It's a monthly chart, so monthly bars of the ratio of gold versus gold miner versus the ratio of the price of gold versus the dollar. What is it not? It's not a chart of gold. That's not what this is. It's a ratio. So what does one would do with this? Basically, here's what's happening, and I'll explain to you why this is important in a second. But you can see the gold versus dollar ratio went sideways for like 15 years, and then it had a huge run for like 6 years. It's now once again gone sideways for 15 years, and it's now actually breaking out. Okay, so what does it mean? It means that the dollar is actually losing value versus gold. So if you're trying to hedge your purchasing power, basically you can look at it as making money from inflation. Gold here is actually a very good spot to be in, right? So the dollar is losing purchasing power because of inflation. And so and of course, because of the debasement of the currency, because of the debt and whatever. All right, it's not going to hell in a handbasket, meaning it's not going to zero, it's not losing its reserve status, but you're losing money because it's losing its purchasing power. And so gold, however, is holding up very well. In fact, it's holding up so well that it's outperforming the loss of the dollar's value. So by owning gold, so we've been long gold for 2 years now, not quite. And we've been done very well because of that against the purchasing power. So it also means that the dollar could go down and or gold could go up, right? It's not necessarily that gold's going to go straight up in a straight line, but it's likely going to quite well. So this is probably one of the most important charts I've seen in a long time. And that's what it means. So if you care about, preserving your wealth, which some of you may do, this is probably something interesting to look at. All right, a couple of questions here. Let me see. Yes, so Nicholas asking about silver. So first of all, Nicholas, the question you're asking is a good one, but I will also admit that it's somewhat tied to greed. I'm not calling you greedy, obviously. I don't know you, but the fact that you're looking at silver shows me there's gold is not fast enough for you, right? And I may be categorizing you the wrong way, but just take it as an example how people tend to look at this. So silver can be very good. It can be very volatile as well, and it's also known as the widow trade. At some point, what tends to happen is when gold works, right? So let's look at gold. So again, we've been long for gold for not quite 2 years, and it's been a good run. It's probably going to go back and forth, and ultimately, I think it's going to continue to go higher. Once that trade reaches a certain maturity level, which it might be reaching soon, people are going to start looking into riskier and riskier trades. That's when they start gravitating towards gold miners, ultimately even gold junior miners, and silver. And that's when you get the GameStops of the world, and not the GameStops, whatever they're called, the Reddit groups and all those fun-loving, Robinhood traders are going to start getting into this stuff. I'm not sure we're there yet. And I would agree with the assessment that yes, silver should follow gold at some point, but you have to have gold reach a certain level of maturity in terms of its rally. I think gold has not yet reached, or gold miners and all that stuff, or gold has not yet reached enough people's radar, and it's not sexy enough yet. There's not enough FOMO yet. People are still chart chasing Palantir, which is down in a straight line over the past 2 days, by the way. They're still chart chasing all these hurrah names, which may have a future at some point, but can also have drawdowns of 50%. Once that stops and gold becomes that's when you go into gold miners and silver. Does that make sense? So also understand that silver is extremely volatile, just like uranium, just like natural gas. That stuff's a lot more volatile than people can handle. That's also when the retail investor will blow up from a trading perspective as well. Okay, so that's kind of how I see that. But it's a great question that you're asking, and I understand. I think I understand why you're asking. So very good. Anyway, folks, we're gonna switch focus here. We're gonna go over to the chat rooms. I want to quickly show you one thing. If you do not own if you're not using the TST Trender. On Friday alone, you left on the table about $5,000. So this is the SPY ETF. And you can see we had a TST Trender. This is a 5-minute chart of last Friday. We had a sell signal. And the S&P 500 ended up dropping like whatever that was. Like the SPY ended up dropping 1.5%. So the futures have, of course, had the same signal as well. Just to give you some idea, and I need to go to the actual intraday on Friday so you can see it. So this is the futures price of the same exact thing. So one S&P 500 future short contract, just one E-mini, resulted in $5,000 of profits. That's just Friday. One sell signal right there, and watch this. So if you're not using a trender, please use it. Please get with Joel. Please get it like now. Right there, that was the sell signal right at the open of the equity market. It reached its free trade target very quickly, and then it trailed using this purple line. Sorry, yeah, my video's in the way. Sorry, you're right. Good point. Stupid videos. There's too many of me here. There you go. Sorry about that. There you go. Is that better? Yeah. So that's the sell signal on Friday. I'm not making this up. I'm not hand drawing these arrows in there. The red ones. I'm showing you this big ass one in green so you can see it. So that was Friday. If you don't have the trender, that's what you missed out on. Again, that's literally just short one S&P futures or buy some puts on the SPY, right? But short one S&P futures contract resulted in $5,000 E-mini contract. And of course, one could have bought puts or whatever. So anyway, Get the trend or email support@steadytrader.com. I'll see you guys over in the chat room where we've got trades to do in about 10 minutes. Hope it was helpful. Please, 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 very important, folks, please give us a thumbs up, like, and please subscribe to the channel. And please tell everyone you can, because otherwise we can't continue doing this show, which I think people find valuable. And also it gives you real-time trade alerts, updates when we're going live, right? So you need to make sure you do that, A, for yourself, but also so we can actually continue doing the show. That's very, very important, and we really appreciate it. Thanks so much for being here. We'll see you back here tomorrow morning, and we'll see you guys over in the chat room here in just a few minutes. We've got stuff to do here.